And so we're just going to segue into my presentation. So obviously, USI is a construction verticalized insurance consultant. We like to think of ourselves more as risk managers that help procure insurance, and we do have a focus in the construction space. We have about 13,000 clients. We do 1.6 in annualized premiums. What makes us unique is a lot of the analytics that we bring to the table for our clients and the expertise of the bench. I mean, for developers and GCs and property owners, we do specialize in builder's risk. We have a proprietary program. We do specialize in OSIPs and CSIPs, contractors' professional liabilities, and everything else that you could possibly need to operate your company. But what I wanted to talk about is from a risk transfer perspective, right? So when you are at the top of the food chain, it's your responsibility to ensure compliance, right? And also to develop a risk management philosophy. And what happens is in the beginning, right, when you have these contracts that are being negotiated with the trades, everybody's bidding on the contracts. And of course, insurance is negotiated or can be negotiated, but it's the last thing that gets considered. And what happens is when, you're passing down the insurance requirements and you get the bids approved and they win the contracts, then you get the certificate, but then you're asking for the actual policy. When it's being reviewed, it is not enough time. And what ends up happening is that it's being rushed, right? So we're being rushed to hurry up and give the certificate, hurry up and give the insurance policies. But if the language is not in compliance with the contract, we need to negotiate now whether can we consider what is being asked for? Can we request what is being asked for in the contract from the current carrier? If we cannot, then we have to go out to market. And then when we go out to market, if it requires, for example, in New York labor law, it's going to drive up the cost of the insurance program, and it's going to completely delay the whole process. And it happens all the time. And I can honestly say that sometimes we are left, holding the deal, if you will, and everyone is looking at us like we're holding up the deal. But unfortunately, underwriters in this space are not looking to hurry up and make decisions about things like this. They want to evaluate what you're asking for. Some carriers do not offer the provisions that are being requested. And so, you really have to understand that you have to incorporate insurance review early on. One of the wonderful partners I've had, in my experience here reviewing insurance with Mike was that, when they're doing the pre-qualification of their contractors, the insurance piece is a really big part of it. And then they get put into a talent pool. Once you've been approved, then, obviously then you can bid. So the certificate then just substantiates the coverage. But as a company, you have to have your whole risk transfer or your corporate risk transfer philosophy, which is going to include, how much coverage are you going to be asking for? When I look at contracts coming down to trades, you could see they're asking for the firstborn, the wife, the car, and the dog legally. And at the end of the day, these guys can't even afford that, right? The trades are not financially capable of indemnifying you financially or even through their insurance program. And so you have to really think about, can the person or the trade who we are asking to cover us, can they really do that? And so when you're developing your whole philosophy on risk management, you're going to be considering that, right? Who is the person that we're asking us to cover? What are the minimum limits that we're asking for? What type of insurance? What are we going to take as evidence, right? Is it going to be the certificate? Is it going to be the endorsement? Is it going to be the entire policy? Obviously, when you're asking for very broad terms and coverage, you're going to have friction. You're going to have delays. You're going to have expenses that are associated with that. So the more you're asking of these trades through those contracts and those indemnification agreements, the more challenges you're going to have. You're going to have lengthier negotiations. There's going to be a bottleneck, right? A lot of your people are going to be stuck. Now the project cannot move along because you're trying to verify insurance, trying to get the cost of the insurance. Are we going to split the cost? Are we going to subsidize the cost? Then they have to, change their bid. There's this whole process that happens when the insurance is not in alignment. And there's this whole backlog of paperwork that now needs to be, included in order for you to make sure that you have compliance. So let's go ahead and go to the next slide.
And just one thing to add on that also remember your loan agreement. If you're getting a construction loan, very often the lender, who may not be familiar with the jurisdiction, the area where the construction is happening, they may have requirements. And one things I see a lot, and to tie in with Jessica mentioning, trades and not having, the ability, is that a lot of times they'll say, okay, this is what's required of the general contractor and major subcontractors. So defining that major subcontractor in the right way is very important, because what means major, or sometimes it doesn't say major, it'll say all subcontractors. So you can't have these crazy insurance requirements that are never going to be able to be achieved.
Right. And if you are at the top of the food chain, which, right, this webinar was directed for GCs and developers, so you certainly are their owners, right? You basically want to do a cost benefit analysis to determine whether what you're asking for is working, right? I have these insurance requirements in my contracts. I have all the right language. I have 5,000 contracts that I put out of which 50 claims were generated, right, from the work being done, of which 5 were not covered, right? So then you say, okay, well, you want to basically look at the value of the claims and the cost of administering your program, right? There's actual benchmarking that you can do, or rate of return, to determine if your compliance monitoring systems, or the money that you're spending to make sure that the contracts are executed correctly, is worth your time. The other thing that happens when you're asking for the firstborn and everything else underneath that, is that fraud happens. Right. So there's some unscrupulous players in the insurance space as well. And basically what I've seen is, I had a client who requested a certificate of insurance. A GC who had a trade asked for a certificate of insurance before they issued the payment, right? Because that's a common practice in the business, where you withhold payment until you get proof of coverage. The person gave them the certificate of coverage. And then when the time came for the audit, the GC found out that that certificate was fraudulent. It was not, the policy was not active. And they ended up having to pay, right, the extra money on their insurance for an uninsured sub. And this comes from, again, just being compliant, right? These trades sometimes struggle financially in order to make, to have the coverage in place, just so that they can get the opportunity to bid on these projects for you. And the other thing too is that even if you have an aggressive risk transfer program, it doesn't negate the careful selection of your providers. That is such a key component, right? Because you have your risk transfer plan in place, but then you're only as good as your weakest link, and your weakest link is those trades. And if your selection process doesn't have or contemplate all of the things that you should be considering, this is kind of a place where you might have some gaps in your program. Punitive measures, if they don't have the insurance, right now we talked about withholding payment. That is probably the most common one that I know of. But the other one that I like to have people do is do not allow them on the job site. Right? Don't allow them on the job site unless they can provide you with the coverage. And the worst part that I've seen is, terminating the contract, and that can open up its own can of worms, because now you're, left in the middle of the project with no trade, and you got to look for somebody else, and that causes project delays. So, there's obviously a lot of things to consider when you're talking about making sure that the risk transfer process has happened, that you're getting the proof, that you're vetting the subcontractors correctly. Let's go ahead and go to the next slide. And so we want to talk about the insurance forms, right? So there's going to be some common endorsements that are going to be used, but I want to talk about really quick the two things that I know for a fact bring up claims and that will get you that denial of coverage letter. And it's such a simple thing. Obviously, the more sophisticated developers and GCs don't necessarily always have this problem, but it's, again, we're talking about what brings you claims, and it's usually those trades, is having unexecuted contracts, so fully executed, signed and dated by both parties, right, prior to the work beginning. That is one of, believe it or not, such a simple thing is what causes claims, because when we have the claim come in, the first thing we want is the contract, right? And the contract isn't executed, or they don't have a copy, that's executed. And that happens a lot. The other thing is the wrong use of additional insured forms. And this is why it's very important that you have the right construction attorney drafting the contracts for each one of your projects whenever possible, because, the insurance world is full of additional insured endorsements. By the way, there's about 20 of them. And how do you know which form number to use? And this is kind of when the partnership between the insurance broker and the construction attorney is incredibly important to the owner or the developer or the GC, because we can work together, we can collaborate to be able to exchange information so that the attorney is using the right forms in the project and the most up-to-date, or the ones that are most relevant for the client, because you'll have what they call blanket forms, and they're not blanket forms. The depending on the version that you're using, the form version and the form date, there's going to be privity of contract, right, Lori? If you're the GC and you're the developer and you're passing down the risk transfer to the trades have these endorsements that are being used that only say the coverage applies for the person whose signature is on the contract. So if you're talking about upstream parties, who's going to be the lender, the joint venture, whoever else is involved, usually it's everybody and their mother, right? 20 different entities that are asking for coverage here, they're not going to be covered. And so now there's a breach of contract. Now the lawsuits are being thrown around. Very common. Yes, I think that's very true. So basically, one of the things that I like to talk about, right, as far as what you can be looking for and whether you will be able to have it or not, depends on the carrier. It depends on the market that you're in. So New York is a highly competitive litigious state. So you may or may not be able to find the right endorsement. But if you're giving that as an example, at least the broker who's looking at these contracts can try to request it. And if they cannot get it, then they will let you know. The CG 2040, you know how many times I've seen in construction agreements that you, the GC, want to make sure that you are covered as an additional insured for 6 years after the project is finished. Yet no one asks for a certificate after that. So the client, the trade, right? Because this is where you're going to run into problems. The trade doesn't have the right coverage anymore. 2 years later, you're no longer listed as an additional insured, and then something happens, right? So this form right here, the ISO CG 2040, is going to give you coverage for upstream parties for completed operations. And it is something that just came out. It isn't available everywhere, but at least if you know about it and you're the one asking for the insurance, or you're the one that's talking to the attorney, you can certainly add it to your program. And then the CG 2038, also another great endorsement if you're looking for additional insured upstream parties. So if basically you're the GC, the developer, you're passing down the requirements, you want to have this included in your contracts because it's going to cover everybody, and there's no privity of contract when it comes to this endorsement. And so the right practice, waiver of subrogation, primary non-contributory, per project aggregate. These are all the basics that we normally include in contracts, in insurance policies. However, it's tailored to the specifics of the trade. So if, for example, I have a roofing contractor, I want to make sure that there's no height limitations. I want to make sure that there's no limitation to the type of material or equipment that they're using. So each specific trade is going to have a program that's basically designed according to what they're doing. What's the scope of work? So here we go. This is part of something that I think is really important, and I think should really be looked at a little bit more carefully. And this is going to be your subcontractor pre-qualification. We talked about the trades not being able to indemnify you. So if the insurance is not going to pay and they're in breach of contract, and you're still asking them to pay for legal fees and to defend you, are they in a financial position to do that? Are they going to be sideswiped if they have a devastating loss, a financial loss, and they can no longer operate their business? So I have a concrete contractor that was recently hacked, and they basically infiltrated the email of the CEO, and they saw that the CEO was communicating with a bank and that the bank was about to wire money. They basically emailed the bank as if they were the CEO, giving instructions for the new routing, and the payment was released by the bank. And that $120,000 was going to be to pay materials, to pay labor, to pay all this stuff. This contractor would have absolutely been out of business if that payment wasn't covered by the bank, because the bank was the one that made the mistake. Financial, the health of the trades financially is a really big part of, I think, the pre-qual. It should be part of the pre-qual process. The character of the owner, the percentage of work that's being subcontracted to other tiers. I had another contractor. The GC hired this carpentry contractor. Carpentry contractor didn't have anyone self-performing. They didn't have not one employee as a W-2. They subcontracted everything out. Those subcontractors paid their employees as 1099s. Now, we all know what happens in New York when you do that, especially when you have language on the policy that basically denies or voids coverage for any cash labor, temporary labor, 1099 labor, right? And so, you have to be very careful. If that subcontractor is subbing out the work, who are they subbing it out to? You need to actually be looking at that as well. And all of these different things, it falls on the shoulder of the GC and the owner. And this is why having a compliance person, right, that you actually designate, there's going to be a person who's going to be trained, someone who's going to be educated so that they understand exactly what it is that they need to do. And this is where Billy would come in and support you.